All right, morning all. Welcome back to Morning Kappa. Happy Monday. So, looking at the S&P 500, well, it closed a little bit higher last week on Friday, supported by robust tech earnings and also renewed optimism on the November outlook, right? So, I mean, with big tech delivering better than expected results and also the banks, America, uh, 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 flagging November as a favorable month for equity, which mainly due to easing inflation and also lower yields, right? So, with that, sentiment remains constructive. And also, I think on the trade front, just to recall, US announced a temporary truce with China, pausing new tariff and also the rare earth export curb, right? So we are bullish on the US market with upside potential right now, right? And also, we need to monitor valuation and upcoming macro data. So, at this juncture, I believe uptrend remains intact if you're looking at the overall trend here. So, if the pullback starts, well, it might resort to a consolidation eyeing for the 6,000 hit 800 points level. So, for the China A50 index futures, well, it closed lower on Friday, reflecting the mix of signals in the market. So to recall, I think recently Beijing newly issued plan is signaling a big push into the tech as well as the domestic demand, which is yeah, it's a positive strategic because it's self-reliance, right? Also uh, on the other hand, the macro data and the regulatory shift towards the larger capital terms are creating a buffer in the large market cap. So we see this move as a consolidation phase. So the upside is still supported by the structured themes, right? So overall, the upside still remains solid. Now, uh, I mean, despite the minor pullback. So if any rebound to happen, I mean, do watch out for the 15,500 resistance level again. Right, for the Hong Kong trading stocks, so today we have MTR Corp stock code 66. So the stock is in its breakout formation and breach above the 28 and 40 dollar resistance level. So if the bullish momentum to remain steady, we can expect it, the stock to test the next resistance at 30 dollar level before it climb higher towards the 31 level. So now if the momentum to reverse, make sure you have a stop loss at 27.4 dollar as it could indicate a possible change of trend, which I think also might affect your trades, right? So up next we have Weichai Power 2338, stock code 2338. And also if you see here, the stock is now eyeing to climb higher after the rebound. Now, if the price able to continue to maintain higher, well, it might reach the $16.8 level before it might propel towards the 1770 dollar level. Well, a reverse below 50 will open the door for a deeper correction, shifting the trend, right? Okay, so looking at the WTI crude oil futures, well, it closed, I would say, modestly high in the latest session, which suggests some relief buying. So, but I think despite overall backdrop of the sluggish demand and also the growing supply, I think we treat this as a counter trend pullback. So we believe that the broader fundamental remains shaky at this juncture, as analysts expect average price towards the end of the year to stay or to maintain at least somewhere around 60 mid 60s dollar level, right? So yeah, let's keep an eye on the inventory data as well as the OPEC announcement for the uh, for the next leg in the upcoming session. So we believe that the oil still hold a bearish technical advantage for the $57 level after the recent rejection, rejection, right? So yeah, moving on to the FKLI, our local market, right? So the FKLI, where it slipped modestly at Friday's close, uh, uh, as regional market weakness and also cautious global sentiment dampening the buying momentum once again, right? So I believe that the market is not uh, consolidating. Will consolidating sideways as domestic fundamental remains intact, but near-term catalysts are, I would say, a bit cloudy, right? So still holding a positive bias on FKLI, targeting for the 1635 points level resistance, uh, 1535 stop loss remains intact right here. Also, do expect a volatile market as we are entering the earnings seasons in November, right? Also, okay, so this is our for this week. Into this week, we have updated some names in our watch list, right? And some of the stock to focus for this week. We can add Hapseng, right? We have Crest right here, Red Hill also to ride on the uptrend. While the names that we are monitoring closely are basically TMK, right? Basically the yellow highlighted ones, right? Okay, so moving on to our Malaysia trading stock. So today we have Hill Utilities. So the stock is in its pending breakout formation after testing the one ringgit and 85 cent level. So with that, we expect that the momentum to remain bullish and the stock able to climb further and test the next resistance at one ringgit and 95 cent, followed by two ringgit and 5 cent level. So if the stock to clear 175 cent support, this might signals a deeper pullback, right? So next we have Chapter Current. Okay, so the stock is now eyeing for uh, experiencing a breakout formation. So if the momentum to sustain, we are expecting that the price to reach the 90 cent level, followed by 95 cent level in the coming up session with high volume. So if the price to if the um, stock to breach below 80 cent level, do watch out for any attempt of reversal. Okay, and lastly, for the FCPO futures, right? Well, it pulled back on last Friday's close, reflecting a growing supply side caution in the palmer market. So while the export data climb, inventories also went up higher. So on top of that, Malaysia cut its November reference pricing slightly, showing pricing pressure is creeping in, right? So we see this move as a negative trading bias, and the risk of further downside remains unless export uh, pace accelerates or the stocks begin to draw, right? So keep our negative trading bias intact, remain unchanged, expecting for the price to reach the 4150 support level. Right, so I'll stop here and pass the floor to Janyo for his weekly economic update. Thank you, everyone, and happy trading.
Right. Hi. Morning, everyone. It's a bit of a technical mishap that we bumped into. So I'll just proceed with my short and sweet presentation. So I have a banks sector update report that is really a summary of Bank Negara's banking system statistics for the month of September 2025. And I think consequently, we can also make some comments on the third quarter, especially looking ahead to third quarter results in November. So I think headline numbers, system loans growth was at 5.5% year on year in September 2025. This has been more or less the pace of loan growth for the past few months. And growth was quite evenly distributed between the household and non-household segment. But importantly, non-households saw an acceleration in loan growth to 5.5% year on year versus 5.0% year on year in the previous month. So that's a positive sign. The key drivers for business loan growth really were the finance, manufacturing, and utilities sectors. And meanwhile, for households, the key drivers were mortgages and hire purchase. We do think that loan demand remains strong. In fact, loan applications in third quarter were up 5% Q on Q. I think, in fact, all the other leading indicators were up on a Q on Q basis. Approvals were up about 4% and disbursements up 2%. So, we expect stronger loan disbursements ahead based on the healthy buildup of approved loans year to date, as well as the accelerating trend in loan disbursements. And so this we think should benefit, of course, the entire sector, but specifically for the banks that have a bit more presence in the non-household segment, for example, CIMB. At this juncture, we maintain our 2025 loan growth forecast unchanged at 4.5 to 5.0%. For some context, the 9-month annualized growth rate is at 4.5%, which is now within our target range after several months of being below that. And so if our thesis for stronger loan disbursements ahead does materialize, then we do think that number should still fall within that range, and in fact, could even go up to the higher end. Right. On interest rates, we note that the average fixed deposit rates in third quarter fell by about 30 bips Q on Q. And interestingly, this drop is much bigger than the drop in the average lending rate, which fell by about 16 basis points Q on Q. And so, this has led to improved interest rate spreads. And in the grand scheme of things, this suggests that domestic NIM margin pressure in the third quarter could be manageable despite the OPR cut. And this is really thanks to the banks that have the banks' preemptive measures at mitigating the OPR cut impact, the biggest of which was preemptive deposit repricing leading up to the month of July. Right, so that's on rates. On asset quality, I think overall this looks quite steady. Absolute gross impact loans were flat Q on Q, and the gross impact loans ratio was relatively stable at 1.41%. And yeah, I think if we look at some of the other indicators such as deposits, these were up 4% year on year. Again, trailing loan growth, this has been the trend for quite some time already. But really, Bank Negara's preferred liquidity indicator, the liquidity coverage ratio, still remains robust at 152%, well above the regulatory floor of 100%. Capital remains ample as well. The Common Equity Tier 1 ratio of 14.2% has been more or less stable for the past few months. So yeah, I think in quick summary, there are quite a few positive signs from the third quarter bank stats. And I think if these trends continue into the fourth quarter, then the bank should be on stronger footing to kick off 2026. So we are still maintaining our overweight call on the banks, with our top picks being CIMB, Hong Leong Bank, and Public Bank. So yeah, that's all from me. Xian Yong, over to you. Thanks.
Thanks all. Sorry for the technical issue just now. Let me reshare my screen. Morning all. we can see that the risk sentiment has improved. This is by our proprietary index. So we actually see three key reasons for this recovery. First of all, we see some improvement coming from the trade negotiations from President Donald Trump in the US and also Xi Jinping, as both of them met in Korea last week. So secondly, we also see US 500 cuts in November, for October. We see this has also have very improved the risk-taking appetite for US markets. Third, we also saw some geopolitical premiums have softened with line with the easing global tensions. So in short, we're seeing reductions in the risk, also less be worried, as this is approved by the VX index and shown by a right-hand side chart here that see some pointed downwards. Up next, on the coming Fed fund rate reductions, we still maintain our base case. There will likely no further cuts for December. So where our projections are guided by the RHB in-house trader rules framework, we suggest that the labor market conditions and inflation expectations are both currently, which suggest there's no urgency for additional cuts. So while not in our base case, the variance risk is tilted to 25 basis point cuts should the labor market continue weaken, and expectedly alongside with other key US economic data release. So the currently US market is on a shutdown, so the key economic release would not be seen or late since September release. So we currently cannot assess it whether the economic suggests what was the current condition for now. However, if the data is showing an unexpected downturn, especially on the labor market, which is a key factors that monitored by Fed, so this could increase the risk to slide toward cuts in the December. Other than that, we also see that the trade between US and China, and this is coming quite fresh, coming on late Saturday, that US government in the White House has released statements that claiming both of them have reached agreement and the US agreed to reduce the reciprocal tariff related to fentanyls from 20 previously and 20 to now and then. Also, China is promising to buy the goods largely from soybeans, energies, and also curb some export restrictions and the rare materials and allow them to stop investigating the firms in the US. So we see this as a good sign to reduce trade tensions. And other than that, what we've seen from the Chinese market also is coming from the 15 5-year plans, in which is released around 20 to 33 of October in the last 2 weeks. So news fires has suggested that the average growth goal of China's was around 4.7 to 4.8% over the next 5 years. Then this is actually in line with expectations. We saw some pullback from the previous 5% average. We also see the plan to emphasize on Chinese needs for technological self-reliance. This is coming from 3 key sectors, including semiconductors, you can see from here, AI and biotech. So this is suggest that the Chinese implicit goal is likely to develop its own downstream firm, which underline the gradual shift away from the exporting rare materials. That's all from me. Happy to talk with you. We'll come back with the morning kappa tomorrow. Thanks everyone. Thanks.